Hey guys, today's video is all about Delaware Statutory Trusts, also known as DSTs, and they are one of my favorite 1031 tax-deferred exchange strategies for many of my clients, especially seniors. This is a great vehicle for selling your building, getting out of property management, getting away from rent control, SCEP inspections, lawsuits, tenants, leaky toilets, and vacancies. What I did is I went to ChatGPT to do a deep dive on everything you need to know about DSTs, how they work, some income calculations. So let's go and check out what ChatGPT has to say about Delaware Statutory Trusts. Okay, we're at ChatGPT. What is a DST? When did they start? And who created them? A DST is a legal entity used for investment purposes, primarily real estate. It allows multiple investors to pool their resources to own a fractional interest in a property or portfolio of properties. The trust holds the title. The investors own beneficial interests in the trust. A DST is commonly used for 1031 exchanges, which is great. Key features. Investors have passive ownership, meaning no day-to-day management responsibilities. And most of you that want to sell your building want to get away from day-to-day management responsibilities, right? A DST can hold commercial, multifamily, industrial, any type of property. They're considered they're considered like-kind property for exchanges. Now, the history goes back to 2004 when the IRS issued Revenue Rule 2004, ruling allowed DSTs to be treated as like-kind exchange property, and the ruling formalized DSTs as a tool for real estate investors to diversify their holdings and benefit from tax deferral. The IRS is the key agency that legitimized DSTs. DSTs are formed under Delaware state law because of the business-friendly legal environment. This legal structure has gained popularity as an alternative to direct ownership of real estate, especially for those looking to defer taxes through an exchange. Can you explain what a DST sponsor is? A DST sponsor is a key player in the creation, management, and operation of a Delaware statutory trust. The sponsor is typically a real estate company or investment firm responsible for acquiring the property to be held and managing the process for the investors. The responsibilities of a sponsor: property acquisition, structuring the DST, financing the property, and offering investment to investors. They also do asset management. After the investment is fully subscribed, the sponsor is responsible for managing the property on behalf of the investors, including day-to-day operations and ensuring the property generates the expected cash flow for distribution. Also manages the relationships with tenants. Now, distributions to investors. The sponsor ensures that rental income or profits are distributed to the investors either monthly or quarterly. The exit strategy. The sponsor develops and executes a plan for eventually selling the property, at which point the investor receives a proportional share of the proceeds. It's usually from 5 to 10 years. Now, what I was told, the reason why they only hold these for 5 to 10 years is because when they get the property and they put a 15 to 20-year lease on the property, they want to sell the property when there's still a lot of term left on the lease. In other words, you don't want to sell a commercial property when there's only 2 years left on the lease because that diminishes the value of the property. You want to sell the property, a commercial property, when there's a lot of term left on the lease. So the next investor will pay top dollar or market value for that property. In short, a DST sponsor is the driving force behind the creation and management of a DST. They take on the responsibility for selecting properties, structuring the trust, managing the investment, and ultimately guiding the trust through the life of the investment. Okay, so that is an overview of a DST investment property from ChatGPT. And by the way, what's cool about ChatGPT is that I can create links to everything that I just read. I know on this screen it's probably hard to read all that text. You might be on your phone or whatever, but I'm going to have links below this video to all the chat GPT conversations that I'm referencing in this video, so you can read on your own all the stuff that I generated through chat GPT on DSTs. Okay, so what I want to do next is do some financial calculations. Here we go. I want to do some financial calculations for a sample DST that I did for a client. So let me share that. Now, this was a DST that we're looking at. It's a Travel Center of America, and it's paying 7.75%. Pretty good. Where are you going to find a cap rate at 7.75% for either a triple net commercial property or another multifamily property? It's no way. It doesn't exist. So let's assume an investor is completing a 1031 exchange to a DST, and they are netting $597,000. If the DST pays 7.75%, how much is the investor going to receive monthly and annual? Well, the annual income calculated is $46,993. The monthly income is $39,16, which is pretty darn good. These figures represent the passive income the investor would receive from the DST at a 7.75% return. Now, there's another great aspect to DSTs, and that's the tax advantages. Most DST sponsors, when they acquire a property, they do something called cost segregation. I'm not going to go into cost segregation right now. I might do it at the end of this video if I have time, but basically what cost segregation does is it shrinks the depreciation schedule from about 37 years down to 10 years. So let's see what the depreciable basis of the property is. Okay, now the DST property is 80% building and 20% land. So let's calculate the basis for the property. So the building value times 80% equals $477,000. Okay, now we have to apply the appreciated depreciation schedule. With an accelerated depreciation schedule over 10 years, the investor would depreciate the full value of the building over that period. The annual depreciation deduction would be $47,765. Okay, so now we have to compare depreciation to income. The annual income is $46,993. The annual depreciation is $47,765, which means the entire amount of the investor's DST income will be sheltered by the depreciation because the depreciation is greater than the income. So 100% of the investor's DST income will be sheltered by the depreciation in the first 10 years of ownership. Folks, I don't know if you understood that. The income you're generating from your DST investment is basically tax-free due to depreciation. That means you're not paying tax on any of this income. How great is that? When I show this to CPAs, they love it. They think this is the greatest thing since sliced bread. Now, I'm not giving you legal or financial advice. You have to rely on your own counsel, your own CPA or accountant to verify all this information and do your own due diligence. But I can provide this information to your CPA. So basically, income calculated over 7 years from this investor investing $597,000 in a 1031 exchange at 7.75%, they are going to get, in 7 years, when this property is sold, they will have generated $328,000 of tax-free income. Not too shabby. Yeah, this is great. This is why I like DST investments, especially for my senior clients who need to get out of property management. They can't handle the building anymore. There's too many new rules and regulations and stuff going on in Los Angeles and California, and they just don't have the energy or the desirability to manage tenants. So that's why I like these DSTs so much, because you get to defer your taxes. You're going to increase your tax You're going to increase your cash flow, and it's going to be tax-free cash flow. How great is that? Now, let's look at a sample DST property that my client was looking at. And let me bring it up. Here's one that a DST company that I work with a lot, Kings Barn Real Estate Capital. Very good DST sponsor. They have the best properties in my opinion, and they're very easy to work with. Anyways, this is one that was brought out. Now this one's already sold out. It's fully subscribed. They have another one coming out, but I don't have all the information on that one. So this was a TA Express, which is a truck stop, convenience store, quick food service location in Louisiana. This is a rendering. This is what they're building right now. So this would be a brand new travel center with a 20-year lease on it. So Kings Barn Real Estate Capital presents KB Bayou Crossing, a single tenant newly constructed TA Express by Travel Centers of America. Located in Louisiana, the property is strategically situated along I-20. At least 9,400 vehicles pass per day. In addition to the convenience store, that also includes a Jimmy John's, Dunkin' Donuts, dedicated truck parking, 16 fueling stations, showers, and commercial laundromat. KBKU, the DST, has signed a 20-year lease with LV Petroleum, also known as Fuel Brothers, which is a successful fuel and convenience store operator with 21 site locations in the Western U.S. So, yeah, this is a great brand new property. Fuel Brothers specializes in the development and operations of low-price, high-service gas stations, convenience stores, and TA travel centers, and has acquired or rehabbed rehabbed or developed, and then sold over 40 locations in the past 12 years. The partnership is also able to purchase unbranded fuel and sell it under a licensing agreement with Phillips 66, Gulf, Sunoco 76, and Conoco, I don't know. They currently supply over 15 million gallons per month to 79 locations. So Fuel Brothers is who operates this particular location. Travel Centers of America has celebrated over 50 years of providing a home away from home for professional drivers and providing meals, fuels, and merchandise for communities and highway travelers. Great company. Excuse me. In May 2023, Travel Centers of America, Inc. was acquired by BP Products North America, Inc., a wholly owned subsidiary of BP. Now, BP used to be British Petroleum. So British Petroleum, one of the largest oil companies in the world, is the corporate owner of these properties. So when you're dealing with a DST on this type of property, you're dealing with high level global companies that own this. So you're not dealing with some mom and pop company that just came out of the woodwork. That's why I like working with Kings Barn Capital. They got relationships with the best companies on the planet. Let's see the next page. There is a aerial rendering of what they're building. And again, Fuel Brothers quick serve restaurants are like Dunkin' Donuts and Jimmy John's. That's what they put in these places. So I'm going to have this. So I'm going to have a link to this PDF so you can look at this on your own. Like I said, all the links are going to be included below. So this is TA Express. Now, when I was investigating this for my client, I wanted to do a deep dive on Travel Centers of America, Fuel Brothers, and British Petroleum to find out more about these companies and how they operate. That's what I love about ChatGPT. So when I got this information from Kings Barn Capital, I did a deep dive on Fuel Brothers, TA, and BP on ChatGPT so I could send this information to my client. That is why I love ChatGPT so much. It really helps. So let's go ahead and share the screen here. Okay, back at ChatGPT. Can you please provide Detailed information about the company Fuel Bros. Fuel Bros is a company specializing in the development and operation of gas stations, convenience stores, travel centers, and was formed in 2014. They operate under a franchise model and have developed 40 locations since inception. Fuel Brothers offers a combination of services, including low price fuel, convenience store items, food, and even gaming at select locations. They plan to expand significantly with 20 new sites projected to open by 2025 in states like Nevada, Arizona, Colorado, and Kansas. Additionally, Fuel Brothers has a strong collaboration with Kingsbarn Realty Capital, through which they acquire, develop, and renovate travel centers, notably under the Travel Centers of America (TA) brand. Can you provide detailed information about the Travel Centers of America company? The TA is one of the largest fuel service travel center operators in the U.S., founded in '72. It serves highway travelers and truck drivers, offering services such as fuel, food, truck maintenance, and repair services. TA operates under several brands, including TA Petro and TA Express, with about 280 locations spread across 44 states. Key divisions include TA Truck Service, which provide truck maintenance and repairs, and TA Restaurant Groups, which operates 850 quick service restaurants. In 2023, British Petroleum acquired Travel Centers of America for $1.3 billion. And this acquisition is set to enhance BP's EV charging network, biofuels, and renewable energy services. The company has about 19,000 employees and remains focused on providing a full range of travel center services. Now, BP, formerly British Petroleum, is a global energy company founded in 1909, operates in 60 companies, is one of the largest oil and gas producers globally, with upstream production of around 2.3 million barrels of oil a day, 21,000 retail sites, 29,000 EV charging points. And in 2023, BP acquired Travel Centers of America, like I said. So that's the deep dive I did on Travel Centers of America, Fuel Brothers, and British Petroleum, who is the corporate, is the corporation in control of these travel centers and all that stuff. So we're dealing with high level companies, deep pocket companies. So when you're dealing with something like a Travel Center of America, ultimately, British Petroleum is not going to let any of these companies go dark or stop paying their investors. So that's a little deep dive. So there's going to be all kinds of DST investments coming out over the next months and years. And so whenever I get one that looks good, I'll be doing a deep dive. So if you come to me and say, Derek, I want to sell my apartment building. I'm tired of rent control. I'm tired of tenants. I'm tired of the city politicians screwing us over. I'm tired of SCEP inspections. I'm tired of trying to find good tenants. I'm tired of everything. I'm thinking about a DST. Any of the DST products that Kingsbarn Capital has, I'm going to be doing deep dives on them through ChatGPT and investigating and providing you that information that you can take to your attorney or your CPA or accountant to help do the due diligence on any of these DST type properties. So I'm going to wrap it up with sharing the Kingsbarn Capital website. Okay, here's the Kingsbarn Realty Capital website, kingsbarn.com. They're a large national company. They do all kinds of stuff, but for our purposes, we just need them for DSTs. So Delaware Statutory Trusts. Okay. So there's some good information about DSTs, basic elements of investing, exchange solutions, advantages, all kinds of stuff. Let's go to current offerings. Here's one, a single tenant net leased property with investment grade credit. So they rented this to Elon Musk and Tesla. It is a Tesla sales and service center, approximately 50,000 rentable square feet. Built in 2024, most of these TST properties from Kingsbarn are newly built or a couple years old at most. The property is strategically located near Twin Cities, 10 minutes from downtown St. Paul, and Lake Elmo, Minnesota. So that is one of the investments that was being offered. Another investment offered is a two-property, best-in-class student housing portfolio. So property one is 76 units, 280 beds. Property two, 100 units, 340 beds. Each property is 5 minutes away from the University of Mississippi's Oxford campus. This is a 1031 exchange eligible deal, and the location is Oxford, Mississippi. So I'll have a link to Kingsbarn's website down below this video. This is I think, a very, very good company, but again, you have to do your own independent due diligence on any DST sponsor you consider. I like them, but that doesn't mean they're the right ones for you. But check them out. I got a lot of experience with this company. I've put other investors into DSTs through Kingsbarn Realty Capital. The guys are very knowledgeable. They have a lot of experience. They buy a lot of property. They know everything about commercial property. I'm telling you, when you get into a DST with no management, tax advantages, and everything that goes along with DSTs, I think you're going to be very happy personally. Like I said, this is great for seniors who don't want to pay taxes. They want to get out of property management. They still need cash flow, and the bonus is the cash flow is tax-free in most cases. So I hope you enjoyed this deep dive into DSTs. All the links are going to be down below. Share this to anyone you know who fits the profile of a senior citizen that doesn't want to own real estate anymore. They don't want to manage tenants anymore, but they want to continue receiving rental income. Okay, guys, hope you enjoyed this video. Please send this video to anybody you know, any landlord you know, any senior landlord that wants to get out of property management, that wants to defer their taxes with an exchange and still wants to receive monthly income to fund their lifestyle. This is great, like I said, for seniors. I've put several people into it already, into different DSTs over the years. They've been very happy. They get that check wired in to their account every month. No muss, no fuss. Their CPA's happy. And like I said, it's just been a real good investment strategy for a lot of people. It's not right for everybody, but for the right people, it could be a great opportunity. All right, guys, Derek Ruiz, eXp Commercial. Look forward to talking to you soon. If you got any questions, you want some answers, you want me to look at your situation, your property, and send you some DSTs, hit me up, text me, call me, email me. I'm here to help.